right. One of the things I was looking at is this Micron technology, because this has kind of gotten to an interesting level here. It's this is real common things we see in markets, right? A level that had been a support level can turn into resistance level. So this is buyer's remorse, right? Just like we talked about the former peaks. People buy here, and when the price goes lower, a lot of them are like, this sucks. I shouldn't have bought. I made a mistake. If it gets back to my level, I'm going to I'm going to sell my shares and get out at break even. So a lot of times, if you're rallying and you're wondering, gee, where should I sell? Well, when you get to a level that had been support before, there's a good chance there's going to become resistance. Then we have this, what we call the old bearish engulfing pattern. Now, I think it's important to remember when we look at charts, we're looking at if you do it right, I should say, if you understand it and do it right, you're looking at a graphical illustration of psychology and supply and demand. So think about this pattern here and forget that it's called the bearish engulfing pattern. Let's just think about what this shows. So pretend this is a football team, I guess, right? The blue team is pushing the ball up the field and, they get all the way up to the end zone, and then the red team makes a goal line stand and the momentum turns. Now, if you were to see on the morning of June 26th, you would have said, oh man, the blue team is still in charge. The top of a red candle or one of these red rectangles is the opening price, and the closing price is the bottom of it. So in the morning, it looked like it was going to be another up day. But what had happened? By the close, the sellers came in and they overpowered the buyers and pushed it all the way back down. Most volume trades on the open and the close. So there tends to be support around prior opens and closes. So the fact that this action put us right through the prior day's close and the prior day's open just shows the real strength of the sellers. And sure enough, a downtrend started. So now the stock has found support around a level that had been resistance. This is the opposite emotion. This is seller's remorse. People sell here, and at first they're like, wow, this is great. The stock went down. But when it goes higher, a lot of them tell themselves, I made a mistake. If I can, I'm going to buy my shares back at the same price I sold them at. So if you get enough remorseful sellers from here, placing buy orders here, the level that was resistance can become support. So it's not a coincidence that this is where this sell-off ended. So it's holding here this morning. Yesterday, you had this little kind of sledgehammer thing going on here. Mm-hmm. And let's just think about what this shows, right? So at one point during the day, the stock was all the way down here. But by the close, the buyers pushed it all the way back up. They didn't get through the opening price, but that still could be a sign that the trend is changing. So if the market keeps moving ahead, and I think I think today it looks like it's going to, there's a good chance that this reverses and there's a bounce there. So just a really good example of how precise some of these resistance and support levels can be. I mean, literally within pennies of a stock that's $130 billion market cap.
Yeah. Really incredible. We've actually talked about Micron here. I think we all have kind of a bullish view here on Micron. I understand that GPUs are doing most of the AI calculations here, but anyone that knows how this stuff works knows that you also need RAM memory in order to get all this done. So Micron, I like this stock. To me, I think if it recaptures this line here, you got a hammer form there on the chart. I think we probably return to that 130 area.